As markets enter correction across the financial world, fear sets in, and many investors choose to capture the gains and quit while they're ahead. So what should you do when there are signs that the markets may be entering bear country? CNBC Africa attended an event hosted by Emperor Asset Management to find out how fund managers respond to market instability.
Do your homework, understand what's happening, and don't panic. We get through these cycles, and they are natural cycles. And in fact, the dislocation that we saw was a very healthy dislocation. I think very timely, in fact. It's created opportunity, value opportunities to come through. And I think it's a reminder too for those who are leveraged, who are exposed through instruments such as a sort of CFDs, that markets go down as well as they go up. So if you are leveraged, it can be quite painful. But I think, you know, if you keep a cool head, as indeed you should, you come through the other side and you're probably better off than when you started.
So it's keep calm and carry on. We see here in South Africa's markets threats of recession. We see the Q2 numbers out for GDP. The economy is falling back and sliding backwards. What's your view in terms of where we should be going?
Just on the economy, stock markets are not perfectly correlated with the underlying sort of economy. And what we've seen is a China-specific event and really very tenuously linked into other parts of the world, particularly South Africa. We know already what the commodity cycle is doing, and we're bumping along the bottom. We may go a bit further down. That is an economic factor that we've known about and has been happening for some time. So it's nothing new. What we saw were bubble factors, stimulatory factors that were largely specific to China that are unwinding now. So your Shanghai Composite goes from 2,000, and had been there for as long as I can remember, up to over 5,000, down to nearly 3,000, and all in the space of a few months. You know, that is sort of casino stuff.
So what should investors be doing in terms of where they should be placing their money? Are there certain sectors that offer more value than others? Over the long term, it seems that it's a winning game nonetheless.
It is. You should be with companies, and there are times to get in, and sometimes it's with trepidation, but you've got to do your homework, you've got to understand. And I think that's part of what I do as well. Understanding companies, understand what drives them, understanding the competition, and understanding cycles. And sort of commodities are a particular example of cycles, and they have quite long waves. But if you take a number of commodity stocks at the moment, take Kumba Iron Ore, for instance, take South 32, just recently unbundled out of BHP Billiton. These sort of companies are pricing in not just spot levels on the underlying sort of commodities in which they operate, but below spot. So, you know, we're pricing in doomsday, or last person to leave planet Earth, please turn off the lights if Eskom hasn't done it for you. So, you know, you can model these. Forecasts are generally not accurate, but you can look at, Thomas, scenarios, and that's part of what I do as well. Look at scenarios, and then you'll get a sense of where fair value lies. And markets typically deviate from underlying economic value for quite prolonged periods of time, both north and south.
The key message of the function was to showcase how volatility can turn into opportunity.
Yeah, I think that volatility, when measured against time, is the lesser of the sort of two evils, in the sense that if you've got lots of time, volatility is your friend. And so the longer you've got to invest, the more you dissipate the effects of volatility. And in fact, as an investor, long-term investor, volatility presents opportunity. So if stocks just went up, it'd never be a good time to buy them, because, you know, everyone's buying them at the same price. Where volatility starts to create anxiety is as people approach their investment goals or their retirement, whatever that investment is servicing. And that volatility destroys wealth, creates anxiety, because they don't have much time left in the market.
We've seen quite a strong bull market run since the crisis of 2008. Seems that the markets are under correction now. Do you see it still bottoming out? What's your view over the short and medium term?
Look, I don't see any risk of a crash. I think volatility will remain at higher levels than what we've experienced in the last 5 years. And I think that's relative to the anxiety that's being created the further we get away from 2008. I mean, people are trying to predict when will the next crash, what will be the catalyst, is it China? Is it the Fed moving rates? My view is I don't see any contagion in the market. I don't think China is going to infect the rest of the world, but it will create volatility. That'll create opportunity. So a good time to be in the market, not a bad time to be invested. And I don't think there's any concern of a major crash kind of retracement, but I do believe we're going to see higher volatility, and so investors, asset managers and clients are going to sit close to their seat for a while.
The event was aptly named Eye on the Summit, where perseverance in achieving one's goals was symbolized by the journey taken by South African adventurer Sibusiso Velane when overcoming one of the toughest challenges in the world.
Climbing Mount Everest will always be obviously linked to every sort of possible danger, and with the risks are so high, people die on the mountain, and I'm testimony to having witnessed people, not for a person falling to dying, but I found people on the way where I was walking literally dead. So Everest has been claiming lives since it was first attempted in the 1920s, and every season, like once a year, that mountain claims life. So it is very dangerous. But now people will probably ask, why do you go? It is not because we want to die. It is not because we want to test danger or faith. It is just because we are driven by things that are much more beyond dying, beyond the danger. And it is just having a dream that is so compelling that it will push you to go through the dangers of any mountain. But if without that, then obviously you can't go anywhere. And we can't focus on the dying of people on mountains, because people die anywhere. So, and that's why obviously today we sort of have these parallels between business, between investing your finances and everything, that you've got to have a dream.
This is not the only challenge that you put yourself through. You've summited Kilimanjaro a number of times, walked across the South Pole. What drives you to do these things to yourself?
It's amazing. I mean, thank you for asking that question, because people think that I'm now an adrenaline junkie or the bug has bitten. No, the bug has not bitten to me. But when I summited Everest, the one thing that happened, two things happened. First, I realized that I have no limits. I can actually achieve anything that I put my mind to and try and achieve. But I realized that I am capable, and it gave me all the confidence that anything that I want to try and do and achieve is within reach, but it will take me to try and to go work very hard and do just that. It was realizing that I've got the ability to do all of those that has kept me going. But it is just looking beyond myself. I don't do the things I'm doing for me. I'm just doing them to inspire my community in South Africa and the entire community of Africa, because I believe that the entire world doesn't really know what Africa is about. I think we are looked at as poor, HIV and AIDS and everything. No, we are not. We are unique human beings, and I believe that we can achieve anything that anybody in the world can achieve. So for me, coming from my background, that is the message I want to share, and to be looked at by a young person as an example of what they can also achieve. That it is not about where they come from, it is not about the challenges that they face in their daily life. It is about what is it that they want to achieve, and what is it that they want to have, and how do they want to live their lives.
And in the goals that you've achieved, this has opened doors and opportunities for you, and now you have a business directly relating to some of the challenges you put yourself through. Tell us about these opportunities that opened up for you.
I feel very blessed. I wouldn't say lucky. I feel very blessed that for me these things have happened right at the right time. I mean, maybe I can easily, obviously, steal the phrase that it's about being at the right place at the right time, and this is very fitting for me, because I never thought that doing adventures will actually draw parallels that are related to life and businesses as well, how one runs a business. So having done things, people come to me and want to find out, how did you start, and how did you get there? How did you endure the hardships and everything? And that is what companies like Emperor Asset Management take from my experiences, to say, you know what, let us just draw the parallels from your real scenario to what we are trying to achieve, which is obviously selling portfolios and managing people's portfolios. And it is just encouraging people to say, you know what, there will be the storms like I experienced on a mountain, but if you hold steadfast with a resolve and never give up, you can actually achieve whatever you have set as your objective. And these are the unique parallels. I never thought I'd be getting these wonderful opportunities, and I love it. I enjoy sharing my story, knowing that people will just take 10 things that they can take from me, which are life principles, very applicable and very relevant.
Emperor Asset Management is one of South Africa's top 10 performing fund managers that structures portfolios based on clients' individual risk and wealth profiles.
Okay, we've got 4 funds at the moment. Our main fund being Robert Falcon Scott. That is currently sitting at around 150 odd million rand. Obviously that value changes every day. Then we've got another fund that we've launched last year, June, which is Sir Edmund Hillary. And the returns are, has been amazing. But that fund is currently sitting at around 80 million. Then we've got a unit trust that we've launched in September last year. That's at 30 million. That's doing very well. And the other fund that we are very proud of is our hedge fund. And that's also around 30 million at the moment. Yeah.
So these funds are relatively small when we take a broader look at the asset management world, but that can be an advantage sometimes, giving you more flexibility to get in and get out when the time is right.
No, definitely. I mean, if you think about it, we can effectively invest in the top, let's call it 200 companies out there. Whereas with some of the biggest managers, they can't. They need to look at the more bigger funds, the more top 40 orientated funds. And as you know, being in the top 40 equity space, you see the names out there, but the returns are actually lower than the less market cap shares. And the other thing, the volatility is also actually quite higher.
An increasing number of young professionals like Rob Pierce are choosing to invest in equity markets to enhance their savings over the long term. But with so many asset managers in South Africa, it makes it difficult to identify a top performer.
So for me, I've generally been, in my background, quite a conservative investor. So for me, what I've generally gone to is sort of moderate to reasonably aggressive investments, predominantly equity focused. So right now, most of my money is invested in unit trust-based investments, and that was some advice I received as a young professional starting out.
You're young, you've got time. Why not go ultra aggressive, high risk, high return?
I've always been moderately invested from an aggressive from an investment point of view. But I'm now trying to broaden that and to be a lot more aggressive. I've got a decent sum of money in that, which I'm now going to potentially shift to Emperor and focus on being more aggressive and being fully invested in equities and not so much in bonds or cash, or limit my amount in cash and bonds.
Lungile Msibi is another young professional who says her peer group do not often think of investing in the stock market.
I was lucky enough. I was one of the statistics. I had money saved up and I invested it in shoes and bags, and I thought that was good, And I was lucky enough to work for Emperor Asset Management, which introduced me to the world of investing. Unfortunately, not a lot of people have that privilege. So luckily I met Emperor Asset Management, and my first investment was with them. But I must mention that my parents are probably the best catalyst for this, because they invested in shares for me when I was still a kid. I didn't even know what they were doing, but they did it. All those BE shares that were launched, I got the opportunity to have a few of those. And that's through them. That's how they introduced me to the investing market. But I got here through Emperor Asset Management personally.
What is your peer group's mindset in terms of investing and saving and putting money away?
I think the biggest issue with our peer group is that they have the ability to save and invest, but they choose not to. And that's not because they can't, it's because they don't have the knowledge or the education to. So I think events like these will help people learn and just push the education out there and help them in making some smarter decisions in terms of investing and thinking long term, which is very hard.
So while many analysts prophesize doom and gloom in the markets, there are many others that say the correction was overdue and remain bullish over the long term, with South African equities able to provide exposure to both developed and emerging markets.